I think that Adam Aron just confirmed that APES hold 97% of the legally issued float. Today I want to talk about Adam Aron's recent speech at the showing of Nope and what this means for the AMC squeeze. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, I want to start by showing you this video of the speech that Adam Aron just gave at the showing of Nope. So let's hear what he had to say.
I don't know which three of you in the audience are these people, but three of you in this house, you wandered into the wrong auditorium. You just like moviegoers, you heard Nope was playing and you saw Get Out, you thought, oh, it'd be fun to watch this movie. The rest of you, I'm just guessing, I don't know for sure, but I think you're apes.
So right there, Adam Aron said that 3 people in that auditorium came to the wrong place. He's also regularly and frequently said that short sellers are in the wrong place at the wrong time by shorting AMC. On numerous occasions, he said that short sellers are in the wrong. He then followed up by saying that everybody else here is likely an ape. Therefore, I think he's saying that 3% of AMC holders aren't apes or they're just in the wrong place, but the other 97% of AMC holders are indeed apes. So AMC has a current float or current shares outstanding of 513 million shares. If you include shares locked up for awards, you end up with 515 or 516 million shares. 97% of those 513 million shares is around 503 million shares held by us apes. Now obviously us apes don't day trade AMC stock and we also don't sell our stock, and therefore that's 503 million shares locked up that effectively aren't being traded. And that leaves only 10 million legally issued shares that are available and changing hands every single day, making up what is the daily 30 to 80 or 90 million shares traded. So that's effectively 3 to 9 times the available float being traded on a daily basis, aka basically proving the existence of synthetic shares. Now you may say, Tom, how can the float be owned 97% by apes? How can us apes hold 503 million shares? What about the ETFs, the institutions, the insiders, the mutual funds, and everybody else? Well, as a result of the short interest, aka those 90 to 100 million shares that are currently being shorted, those shares are effectively double counted. You effectively have the original holder of those shares, which is likely an ape. Those shares are then located or sometimes not located and shorted or sold to another holder. That second holder or that second owner is likely that ETF, the mutual fund, the institution, the insider, and everybody else. So you effectively add on these 90 to 100 million shorted shares on top of the 513 million legally issued shares, because obviously the share is once held by an ape and then shorted and held again or held a second time by the institution, the ETF, the mutual fund, or whoever else. So you effectively have a total of, say, 600 million shares. 503 million of those are held by us apes, and the remaining 100 million of those are held by the ETFs, the mutual funds, the insiders, the institutions, and everybody else. But I think really this is just one step closer, or another way for Adam Aron to prove the existence of synthetic shares without outright saying it and opening himself to being sued. I also wanted to show you this video of Adam Aron at that exact same showing, talking about how on January 27th there was 100 million shares outstanding, but 50 million of those were held by one singular institution. He then spoke about how there was only 50 million shares available if half of them were held by one institution, but yet AMC managed to trade 1.25 billion shares in a single day.
We put out a press release on Monday, January 25 of 2021 that said we made it. We raised $1 billion and like bankruptcy's off the table and we're fine. Tuesday night, around 6 o'clock in after hours trading, apes arrived and our stock started to explode. And on the Wednesday, January 27th of last year, our stock went from $5 a share to $20 a share in one day. And we traded on the New York Stock Exchange more shares than I know how to count. At the time, we had 100 million shares outstanding. Total share count. and 50 million of them were in the pocket of one large institutional holder who was not trading stock. So we really only had 50 million shares that traded. On that one day, that day that our stock quadrupled, on that one day, we traded 1,250,000,000 shares in a day. We only had 50 million shares that traded at all. And they turned over like 25 times. That's like every 15 minutes, the whole shareholder base in the company is a new shareholder base in the company.
So what I really wanted to bring your attention to there was the way that Adam Aron said that 1.25 billion shares were traded and there was only 50 million shares available. He said it while practically laughing. I think Adam Aron is laughing at basically just how obvious the existence of these synthetic shares actually is, and also laughing at the fact the SEC is doing absolutely nothing about it. I do see a lot of people being very harsh to Adam Aron on Twitter about this and the fact that he hasn't sued these hedge funds or made the SEC do something about it. But what I think you have to remember is, well, yes, Adam Aron is the CEO of AMC. Adam Aron is only the CEO of AMC. Adam Aron can't control the SEC. Adam Aron can't control the Fed. Adam Aron can't control the DTCC. Adam Aron can't control these billionaires and these hedge fund managers currently shorting AMC. Adam Aron is only a CEO of a theatre chain. Maybe if he was Adam Aron, President of the United States, he could do something about it, but he's only Adam Aron, the CEO of AMC. And I just wanted to talk about just how close we are to the collapse of Credit Suisse, which will cause the market to crash, which will cause AMC to finally squeeze. This article from Reuters says that Credit Suisse is considering how it could cut costs further after a dismal performance by the embattled bank in the past quarter. An unnamed senior banker told the newspaper that the numbers are catastrophic, adding that staff morale is very low. He said that managers and the board of directors are now discussing a new large cost savings plan, a second executive told the paper. And Bloomberg has also tweeted saying that Credit Suisse is reportedly weighing in a fresh round of job cuts and other measures aimed at reducing expenses. Clearly, Credit Suisse has taken on some massive losses over the last 6 months, not just with Archegos, but I'm sure many of the loans they've lent out have effectively defaulted. As a result, Credit Suisse has taken on massive losses and they aren't generating profits. Therefore, they're scrambling, trying to do anything they can to cut costs before the bank collapses. I think if a major bank like Credit Suisse ends up collapsing, they'll obviously be forced to sell off their stocks, but it will throw the wider market into a panic and everybody will dump their stocks. This will cause that final Hail Mary crash. The S&P 500 may drop 5, 10 or even 20% in a singular day, liquidating many other smaller banks and many other hedge funds as well. Many hedge funds being liquidated will again cause the market to fall further, and I'm sure many of these hedge funds being liquidated are going to be those over-leveraged, overexposed hedge funds that are likely shorting AMC as well. And when those hedge funds end up being liquidated, they'll be forced to sell off their over-leveraged, overexposed longs and forced to cover and close out of their AMC shorts. And obviously all of these hedge funds closing their AMC shorts all at the same time and forcibly closing their shorts, not allowing them to be transferred, will cause the AMC squeeze. On top of that, Wall Street Silver tweeted saying that in China, 950,000 home buyers are refusing to pay their mortgages, totaling an estimated $100 billion. Construction has stalled and many financial institutions aren't allowing Chinese home buyers or just Chinese people access to their money, and therefore $100 billion worth of people are now refusing to repay their mortgages. Wall Street Silver says obviously their system is freezing up. This contagion is now spreading from the home builders to these financial institutions as well. And it won't be long until it spreads from these Chinese financial institutions across the water to these US financial institutions as well, and likely UK and European institutions as well. I told you on Friday that BlackRock had set up a new $14 billion fund to take advantage of the coming market crash. But on top of this, Blackstone have also prepared a record $50 billion to snap up real estate during the coming crash. Zero Hedge tweeted this chart showing the home buyer affordability index, which is currently lower than it was back in 2007, just before the crash. They've said, alas, it also means that just like 2007, a housing crash is now just a matter of time. They've said that much is known. What is also known is that once housing craters, the largest US residential and commercial landlord, private equity giant Blackstone, is about to get even bigger. They said that's when it would deploy some or all of a record $50 billion in dry powder it's raised to prepare for just the coming housing crash. So it seems like Blackstone and BlackRock are both clearly preparing for the coming housing crash, preparing to swoop up millions, if not billions of dollars in housing deals. And obviously, if we see a housing crash, we will almost certainly see alongside it a stock market crash as well. Mac 10 also tweeted saying it's been the fastest 2-year home price increase in history. It's also been the fastest 30-year mortgage increase in history as well, the highest rate in 14 years. And that's led to the lowest homebuyer sentiment on record, which the Fed is saying equals a soft landing. Sure. Here you can see the median home price absolutely spiking over the last 2 years, and the 30-year mortgage rate also spiking over the last 6 months as rates have been increased. What you can also see is the Michigan buyer sentiment absolutely cratering to negative 71%, significantly lower than it was back in 2006 and 2007 at only negative 20%. All signs are currently clearly pointing to not only a housing market crash, but also a stock market crash as well. But of course, Wall Street is still blaming the retail investors, saying that a new bull market can't start until investors give up. They've said for a new cycle to begin, people who bet on the market need to capitulate. Problem is, they've forgotten what that feels like. And as Stonks Batman said, let me translate this. Wall Street sold and they aren't buying the dip because retail didn't sell. Okay, Wall Street is blaming us for the current crash and saying that it's all our fault. The market can't go back up because we haven't yet sold. It seems like everything at the moment is being blamed on us, the retail investors, but obviously we know that it's not our fault. We know it's these over-leveraged hedge funds that have effectively fulfilled this self-fulfilling prophecy. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.